Good day, learners. This is Ms. Luchano here. Today we are going to do economics. The topic of the day is secular flow. Welcome, class of 2015. Hope we are going to have a wonderful and great year with hard work. Thank you very much. Hope you enjoy the lesson. In grade 10, we discussed the secular flow of an open and closed economy. It's a continuation of what we dealt with in grade 10, but we're going to focus mainly now on an open economy than a closed economy in grade 12, and we're going also to do the calculations from the secular flow, that is the workings of the economy. So I hope you enjoy the lesson. The entire topic of the secular flow, whenever you have a topic, remember the most important thing about the concepts in economics is that we should be able to define the concept. And how do we define the secular flow? We define the secular flow by saying it's an interaction of the economic participants. And who are the economic participants? We're referring to the household, government, the firms or businesses, as well as the foreign sectors. Please don't make a mistake of when you are supposed to write household or the foreign sectors, then you say FS. FS is not a right abbreviation. So you just write in full foreign sector, firms, government, as well as the household. And then we are going to do an illustration of an open economy. In my introduction, I said that in grade 12, we mainly focus on open economy. So an illustration means that we must be able to make a drawing. We must be able to draw a complete secular flow for an open economy, right? From the secular flow, again, we're going to identify and discuss the real and money flows. Real and money flows. The real flow is a flow of factors of production and flow of factors of production as well as the flow of goods and services. The money flow is whereby there is a flow of income and flow of spending and expenditure. Another subtopic linked to the secular flow is that we should be able to identify the leakages and the injections in the secular flow. Leakages are the withdrawals. And what are the withdrawals? They are tax, savings, as well as imports. Injections, indicated by capital letter J, are the additions into the economy, and these additions are brought by government spending, investment spending, as well as exports. Within the secular flow, we are also going to do the model equation. And we say that the economy is in equilibrium. The economy is in equilibrium only when the leakages are equals to the injections. When leakages and injections are equal, then we say the economy is in equilibrium. And when the economy is in equilibrium, it means that production is equals to income, which is equals to expenditure. And this is our model equation. Y is equals to C plus G plus I plus open brackets X minus M close brackets. We also have to define and discuss and even explain the role of the markets in the economy. And we can identify between the factor market, the goods market, the money market, capital market, as well as the foreign exchange market. From the secular flow, the workings of the economy, we are able to calculate the national account. And what is the national account? The national account serves as a source about the health of the economy. We use the national account to determine how healthy is the economy. Is our economy growing? Are we not growing within the economy? So we can use three methods to calculate the health of the economy or the national account, which is the production method, expenditure method, And lastly, the income methods. These are the three methods that we use in order to calculate the national account, right? The last subtopic is going to be the multiplier. The multiplier means that a change in spending causes a disproportionate change in aggregate demand and also a change in the level of aggregate income. Now let us go back to the illustration, the drawing, a complete drawing of an open economy. Right? An open economy is an economic system whereby we trade with the foreign sector. So we must indicate all the participants, including the foreign sector. And who are the economic participants? They are the firms, the government, the household, and the foreign sector, because we're trading internationally, right? So remember, when we are to define or to discuss the circular flow, we talked that the circular flow, it shows the interaction between the economic participant. So how do these economic participants interact? That's when it comes to the discussion now of the circular flow, the role which each and every participant plays in the economy. We start with the household. Why do we have to start with the household? Remember, the household are the owners of the factors of production. Production, it starts with the household and it also ends with the household. They own directly and indirectly the factors of production. So when the household release their factors of production which they own, they sell the factors of production at the factor market. The factor market is going to sell those factors of production to the firms. Why are they sold to the firms? Because the firms need the factor inputs in order to produce. So after production takes place in the firms, these goods are taken, goods and services are taken to the goods market. Goods come out of the firms whereby they use the factors of production. They produce goods and services, and those goods and services are sold in the goods market. Remember, again, your grade 11 syllabus, when you talk about goods and services, goods can be classified into 4 categories. We have in durable goods, non-durable goods, semi-durable goods, and services. So all those goods are produced by the firms. At the goods market, the household who has sold their factors of production, they are going to buy. Their household are going to buy final goods, semi-final goods in the form of durable, non-durables, services, as well as semi-durables from the goods market. So what is very important that we need to highlight here is that a circular flow, it goes in a form of a circle, but there's always an opposite direction. When the household releases their factors of production, sells their factors of production to the factors market, they received something in return, and that we name as remuneration. The household received remuneration in the form of income and salaries. Income for the factors of production. From grade 10 syllabus, we said that the income for household is rent, wages, interest, as well as profit. So the households are going to use their income where? In the goods market, in order to do what? To buy durable goods, non-durable goods, semi-durable goods, and services. So why do the household buy the goods and services? The main aim of household is to survive. So the household needs goods and services in order to survive. So when household buy goods and services from the goods market, we have the concept now that is called consumption. Consumption means to use. So the household are going to consume goods and services that are produced by the firms. So they are going to spend their income on the consumption of goods and services, and we classify that as consumption spending. In grade 11, we learned that this is denoted by capital letter C. After the household bought the goods and services, the very firms who are the producers, the main aim of the firm is to produce, they receive income in rents. Why income in rents? Remember, rents are the currency of South Africa. They are our currency. So they are going to receive income in rents. And income for firms, we know from grade 10 syllabus, is profit. After the firms sell their goods and services in the goods market, they receive income in the form of profit. If you check this, it's also an opposite direction of the flow. The flow now goes in opposite direction. Right? For firms to be able to produce, we said that they need the factors of production. What are the factors of production? Grade 10 syllabus again is natural resources, capital, labor, as well as entrepreneurship. So the firms must make a payment for the factors of production. The very payment from the firms goes to the household as income. Payment from the firms goes to household as income. Payment from the household goes to firms as income, right? So this is going to be expenditure by firms on what? On the factors of production. This side, we are going to have expenditure by household on final goods and services that have been produced by the firms. Then we have another participant, which is the government. The government, in grade 10, we explained that it operates on 3 levels: local, central, as well as the provincial government. But the main role of the government in the secular flow here is that the government provides public goods and services to the household. And the household, they pay tax to the government. After they receive the income, they must pay tax, household must pay tax to the government. So this becomes what? Revenue or income for the government. The government also supplies or provides public goods and services to the firms. The firms in return, or after receiving their income in the form of profits, they also pay tax to the government. The tax from the firms also becomes a revenue for the government. The government, for the government to be able to provide public goods and services, the government also goes to the market. They buy goods from the goods market. The government also buy factors of production from the factors market, because remember, we're having people or laborers who are employed by the government. So labor is also a factor of production which is needed by the government. And remember, the government also owns a certain companies or businesses. So the government is also employing entrepreneur or in need of entrepreneurial talent or skills. So the government also buys from the factors market as well as from the goods market. Let's look at this one now. The financial market or financial institution, the role which this market plays. Remember, the household receives what? An income for ownership of what? The factors of production. The firms, they receive what? Income for production of goods and services. So what it happens here is that the firms save part of their profit in the financial market. The firms save part of their profit in the financial market. So when they save part of their profits, they receive interest, right? And the firms can also loan money from the financial institution institutions. When the firms loan money in order to expand or to create a new businesses, they create what we call capital formation. When firms loan or borrow money in order for increasing or expanding the existing business, they create a concept in economics that we call capital formation, right? Household, after receiving their income, they save in financial institutions or the financial market. The household save part of their income and receive their dividends or interest for their savings, right? And then let's go to the foreign sector as another participant in the economy. The foreign sector, the relationship between the foreign sector and the firms here, according to the diagram, is that the firms export their final goods and services that have produced. They export. And what happens when you export? You receive earnings. You receive earnings or payment for your exports. And these earnings are going to be used to pay for their imports. The firms also, they buy from the foreign sectors. And when firms buy from the foreign sectors, we say that the firms have imported from other countries, and therefore they must make a payment. And what do we use when we make a payment for imports? We use the very foreign earnings, the currencies that were paid by the foreign sectors. We use the same currency to pay for what we import in the country. So it is very important that you are able to discuss the role of each and every participant, because this is also a possible essay question. It's a possible 40-mark question. Let's say, for an example, the examiner requests of you to discuss the role of the participants. Discuss the role of the participant. And in your discussion, you must make use of the diagram or illustration. This is how you must do it. You must write your introduction. In your introduction, very important, always define the concept in question. And the concept in question in this example that I've just mentioned would be what? The circular flow, right? You must explain or define what is a circular flow, and even mention the participants of a circular flow, and even mention that we, like the last line here, if South Africa did not trade with other countries, it would have a closed economy. But because we are trading with other countries, we are running at an open economy. After you do this, you make your illustration. When you discuss a participant, let's say the most important one, you must write logically. You discuss the household. Why the household? We said that the household are the primary participant. Why are they the primary participant? Production starts with the household and it also ends in the household. What do we mean when we say production starts with the household? The household are the owners of the factors of production. And these factors of production are going to be used by the firms so that the household will be able to satisfy their unlimited human needs through the consumption of goods, final goods, and services. So the first participant is the household. That is why when we discuss the diagram, we'll always have the household at the top of the circular flow, because they are the major participant in the economy. And then the next point that you can mention is that the household earn an income. And how do they earn an income? When they sell the factors of production to the factors market, they receive an income in the form of interest, in the form of profit, in the form of salaries, right? That's what you need to mention. You also, and remember, very important, guys and girls, we write in point form. No paragraphs, we write in point form. So according to my summary here, I have point number 1, which is the household is the primary participant. Point number 2, they own directly or indirectly the factors of production. From ownership of the factors of production, the household earn an income. After household earn income, they must pay tax to the government. They pay tax to the government. Then you go to the next participant. It's going to be your second subheading. Whenever you write an essay, please structure your essay correctly. When you write an essay, make sure that you structure your essay correctly. We always start with an introduction, whereby we are going to define the topic in question. What do we mean by defining the topic in question? That our topic right now is the secular flow. So it means you must define the topic secular flow. What is secular flow? And you mention the participants in your introduction. For how many marks? For 2 marks. Introduction is 2 marks. Your introduction need not be more than 5 lines. No, just an explanation of 2 to 3 lines, again depending on your handwriting. But remember, when we write an introduction, what do? We define the topic in question. Then we go to the body. In economics, the body is now subdivided into 2 parts. We have in the main part as well as the additional part. So what do? You write, your first subhead is going to be the main part. The main part. And what in this question that I've just made an example of, the main part is going to be what? The role of the participants. That's where you discuss now the household. And B, I said you must write in point 4. And then you discuss the role that the household play in the economy. The role that the household play in the economy. Then you get to the next participant that is going to, under main part, the next participant is going to be your second subheading, which is the firms. Right? Which is the firms. Then you mention what is the main activity of the firms. The main activity of firms is to produce. But what do the firms need in order to produce? They need the factors of production. Where does the firms get the factors of production? The firms must buy the factors of production. As soon as the firms buy, this becomes what? An expenditure. It becomes expenditure for the firms. They must buy those factors of production. After buying the factors of production, production takes place in the factories, and then they sell product. Firms will sell their goods and services they produced were in the goods market. In the goods market. What do the firms receive after selling goods and services? They are going to receive an income. What is the income received by the household? They receive income in the form of profit. This is the remuneration for entrepreneurial talent or for entrepreneurs. Right? Then you go to the next participant. It's going to be your third subheading according to the example, an essay question that I've just made an example. It's going to be your third subheading, which is the government. Remember, I said discuss the role of the participants in the common government. Right? There's one thing that I forgot to mention here. The firms also pay tax to the government. Firms also pay tax to the government. You need to mention that. And then we have to discuss now the role of what? The role of the government. The government, right? You can mention that it operates on 3 levels, right? But you must discuss, stick to the question. What is the role of the government in the economy? To provide public goods and services. I want us to look at this one. If you say the government provides public goods and services, please be specific, because out of this sentence, you can get score about 4 marks. If you say the government provides public goods and services, it's a bit vague, if that's the right word to use. But be specific. Who gets public goods and services? Because your question must be related to the illustration. And we're having arrows there. Government, there is a flow from government to the household, the flow of public goods and services. So you must mention that the government provides public goods and services to household. You get your 2 marks. Then you go to the next bulletin. The government provides goods and services to firms. You get 2 marks again. So out of 1 keyword, provision of public goods and services, you can score 4 marks. So whenever you write an essay, remember, the aim of writing an essay is to score marks. Write in such a way that you are going to score more marks. Right? Let's go to text now. There's a flow about text from participant firm as well as participant household. So you also have to be specific. The government receive text from household. It's 2 marks again. You repeat the same sentence, but now you must talk about a different participant, which are the firms. The government receive tax from the firms. Then you score another 2 marks. If you can check under this subheading, you've scored already 8 marks. Plus, more or less, 2 marks, depending on what the examiner expects us to talk about with regards to the government. Hope you get that one clear. Thank you very much. Let's go to the next participant, which will be what? Now, the foreign sector. The main activity of the foreign sector is, as a participant in the economy, is import and export. Can we get this one now clear? Most of the time, learners, you tend to say, let's say this is the foreign sector as a participant. This is the firms now. And then when you show the interaction, you just do this. Imports and exports. Guys, between the firms and the foreign sector, we are having 4 flows, not only 2 flows. There are 4 flows. If the firms export to the foreign sector must make a payment back to the firms. If the foreign sector sells to the firms must also make payment to the foreign sector. Please consider that. Whenever you write about the foreign sector, you need to mention that there is import as well as payment for import. There is exports as well as payment for the exports. Now let us go to the flows. We said that we can distinguish between real and money flow within the secular flow. Let us look at the diagram again. We said that the real flow, very important, what is flowing? Goods and services, right? Goods and services. What else is flowing? The factors of production. So I want us to identify the real flow from the diagram. So the real flow being the flow of goods and services. We are only going to focus on goods and services. Goods and services flows from the firms to the goods market. So this become our real flow. Factors of production are flowing from the household to the factors market. There we go. This become now our real flow again. We can also experience real flow between the foreign sector and the firms. Remember, we're having South African citizens who are employed in overseas countries. So because they are the laborers and they form part of the factors of production, that's also a real flow. Even if we do not directly indicate the flow of factors of production between the foreign sector and the firms. But remember that we having people who are employed overseas who are South African citizens. So remember, whenever we have a factor of production flowing between one participant and another participant, that gives us the real flow. Then the money flow. The money flow goes in opposite direction to the real flow. When factors of production flow from the household to the factors market, the household receives an income. That income, what is flowing? It's money. So this is going to give us money flow. When the firm buy factors of production from the factors market, what is flowing? They must make a payment. So payment for factors of production also gives us money flow. When the household spend on goods market, they must make a payment for consumption of goods and services. So making a payment, expenditure on goods and services also gives us the money flow. When the firms sell their goods and services at the goods market, they receive income. The reception of income, it also becomes the flow of money. Right? Let's go to the foreign sectors now. When we export to the foreign countries, we receive what we call foreign earnings. In this circular flow, they say it's a receipt for exports. The receipt for exports or foreign earnings, they also give us money flow. But what went out of the country was real flow, because we sold what we have produced in South Africa. When we import from the foreign sector, we buy their outputs, we buy their products, then this is what? Real flow. When we make a payment for what we imported from the foreign sector, the broken line flow there, it gives the money flow. Right? There is also real and money flow between the government and the household. When the household pay tax to the government, what is flowing there? It's money. So this gives us money flow. When the government provides public goods and services to the household, what is flowing there? It's money flow. When the government provides public goods and services to the firms again, we experience real flow, because it's provision of goods and services. When the firms pay tax to the government, it's money flow. Right? So money flow, it's a flow of money from one participant to another. But the flow of money is not only the flow of money because of payment. It comes as flow of money when the participant receives income or when the participant is spending. Those are the key words when we talk about the flow of money or money flow. Money is flowing when the participant receives income. Money is also flowing when the participant makes a payment. Number 4, leakages and injections. Leakages are withdrawals in the economy. Leakages are the withdrawals in the economy. Why withdrawals? If the household decide not to spend part of their income and save part of their income, where in the financial institute, the saving of household in the financial markets, it gives us what? a leakage. Why leakage? This money which is kept, which is saved in the financial institution or the financial market, it does not give further round of money being able to circulate. Meaning what? A certain proportion or portion of the household income is kept aside, is not circulating, it's not spent within the economy. So that means it's a leakage. Money is withdrawn from circulating in the economy, right? Another way of which money is withdrawn from circulating, it's when the household pay tax to the government. The money is not circulating, it goes to the government. So taxes, they form part of what? They form part of a leakage in the economy. Again, when we buy goods from foreign countries, when we import, we must make a payment. We take money out of our country, so this money is not going to circulate in the country. It goes out of the country. So that becomes a withdrawal of money that we're having in the country that goes to other countries. So leakages occur in three ways. Number one, through savings. Two, taxes. Number three, through imports of foreign goods and services. Then we have the injections. Injections are additions into the economy. When you talk of injections, we say that injections are additions into the economy. Injections happens when money enters a circular flow and increase the quantity of money in circulation in the economy. Injections can happen in three ways. If the government decides to increase its spending, that gives an injection. Let's say, for an example, the government decides to build a new school. It means that the government has injected money into the economy when building a new school. If the government decides to improve on infrastructure within the country, it means that the government has injected money into the economy. The second way in which injection takes place, it's through investment by the firms. Through investment by the firms. When new businesses are opened, when money is spent by firms to buy capital goods, that becomes an investment. So money is also added into the economy. There's money that is added into the economy. How does buying new capital goods add into the economy? Remember, from grade 11 syllabus, we discussed that the use of machinery increase productivity in the country. So when we buy capital goods, production is going to increase. When production increase, firms will be able to sell more goods and services and even export more goods and services and earn more of income. So money comes into the economy. Another addition or injections that takes place in the economy is through exports. When we sell to other countries, money flows into the circular flow from other countries. As more goods and services are sold to foreign countries, more foreign exchange is earned within the country. And this will increase income, spending, as well as production in our country. Let us go to more model equation. We say that the economy is in equilibrium. The economy is in equilibrium when leakages are equals to the injections. When leakages are equal to injection, that means that production is equals to income and income is equals to expenditure. So when leakages equals to injections, what does that say? It says to us savings plus tax plus imports is equals to government spending plus investment plus exports. They are all equal. So we say the economy is in equilibrium. Gross domestic expenditure is calculated as follows. When the economy is equilibrium, we're going to say now, gross domestic expenditure is equals to consumption expenditure by household added government expenditure plus investment spending by firms plus, open bracket, exports minus import. We always minus the import because it's money that goes out of the country. Right? And then we go to the markets. Let's do the markets before we go to the multiply. The markets in the economy. From the circular flow. Okay. We have in number one, the goods market, financial market, as well as what? The factors market. The other market here is the foreign markets, where we sell what? Where we import and we export. Let us start with the goods market now. The goods market is where we sell goods and services, where the firms bring their goods and services for sale. And we also call this the product market. Goods market is also called the product market. Who are the participants in that market? The firms, they sell. The household are the buyers, as well as the government and the foreign sector. Then we have in the factors market. The factors market is a market where we buy and sell the factors of production. For example, capital is borrowed, labor is hired, property rented, and entrepreneurs sell their services. Examples of factor market include financial market, labor market, as well as property market. So those are the examples of the factor market. Then we have the financial market, which constitute of all commercial banks, South African Reserve Bank. Those are the examples of financial market. But the financial market, we can divide it into money markets as well as capital markets. We can divide the financial market into money market as well as capital market. The money market is the market for short-term savings and loan, whereas the capital market is the market for long-term savings and loans. Right? That's the difference between the money market and the capital market. We're making short-term loans, whereas in capital market, we're making long-term loans. The South African Reserve Bank is a major institution in the money market, whereas in the capital market, the Johannesburg Security Exchange is the major institution in capital market. We are going to take a 5 minutes break and then we'll see you after the break. Welcome back, learners. Let us go back a bit just to remind ourselves what we are busy discussing. By discussing the circular flow, and then we said we need to define, we must always be able to define the concept that you are discussing, which is the interaction of economic participants. And who are economic participants? The household, government, the firms as well as the foreign sectors. The second most important thing is that we are talking about the circular flow of an open economy, and we must be able to make an illustration. To illustrate means to be able to make a drawing of an open economy circular flow. We also discussed the real as well as the money flows, whereby we said that the real flow is a flow of the factors of production. The real flow also is a flow of goods and services from one participant to the other. The money flow is a flow of money in the form of income received or spending by the participants. We can also distinguish between leakages and injections. Then we said that leakages are withdrawals within the economy, and the withdrawals can take place in the form of taxes, which we pay to the government, in the form of savings, the money that we save in the financial institutions, as well as when we buy imported goods from the foreign countries. Injections are additions into the economy, and additions into the economy can occur when the government injects into the economy through increasing its spending. For example, if the government decides to build a school, if the government decides to improve infrastructural services that they provide to the public. Then additions also takes place when the firms make an investment, especially when they buy capital equipment, because capital equipment is used for production purposes, and the more we produce in the country, the more the country will grow economically. Additions are also made when we sell our locally produced items to the foreign countries. We are going to earn foreign earnings, which we use in order to pay for the imported items. We also discussed the model equation, where we said that the economy is in equilibrium when leakages are equals to the injection, and therefore that would mean that production is equals to income and also equals to expenditure. And the model equation is Y, which is income, is equals to consumption spending by household plus government spending or government expenditure plus investment spending by the firms plus open bracket expenditure on income that we receive from the foreigners, which is export. Then we must always subtract the imports, expenditure on imported items. Within the circular flow, we can distinguish between different markets. First market we discuss is the factor market, where we said that in the factor market, it's where we buy and sell the factors of production. And examples of factor markets are the financial market, the labor market, as well as the property market. And then goods market, it's a market where we buy final goods and services, or where we buy goods and services. And we know that we can classify goods into 4 categories: semi-durable goods, non-durable goods, durable goods, as well as services. Those are sold and bought in the goods market. We can also call goods market the product market. We also have the money as well as the capital market. But money and capital market are the financial market. They represent the financial markets. In the money market, it's where we make short-term savings as well as loans, whereby we said that the South African Reserve Bank is the major participant, whereas in the capital market, it's where we make long-term savings as well as loans, long-term loans. And then the major institution that is responsible for The capital market is the Johannesburg Securities Exchange. Then the foreign markets. The foreign market is important, and there are regular flows of imports and exports in and outside the country. So trade requires foreign currencies and can only be exchanged where? In the foreign exchange market. So the foreign exchange market is that market that makes trade between countries possible. It's where we are able to determine what? The exchange rate of different countries' currencies. And when we are able to identify or to determine the currencies of each country, we are able to determine now what we call the exchange rate. Now let us do the national account. The national account serves as a source of information, gives us information about the health of the economy. And how can we calculate the national account so that we assess the health of our country's economy? The health refers to the growth of the economy. Are we growing as an economy? Are we not growing? Is production increases? Has production decreased? Are people employed? And how many people are not employed? Why is that so? We use these accounts, right? So we use three methods to calculate the national account. The first method is the production method, right? The second one is the expenditure method. And the third one is the income method. National accounts are an important source of information regarding the health of the economy. We can identify national account by using the production method, by using the expenditure method, or by using the income method. Let us look at the production method. The production method is the method which the sum of all production units produced by the primary sector, the secondary sector, as well as the tertiary sector. So we calculate the production units of each and every sector in the economy. These sectors provide goods and services in agriculture, mining, manufacturing, construction, and the service industries. So gross domestic production, when we use the production method, is the total, the gross value or the total value added of total output, and then we minus, or we say less, the value of inputs utilized in the production processes. How do we calculate this? Let us go to the calculation. Let's look at this one now. The gross value added by the primary sector in 2011, this is the source. Our source here is South African Reserve Bank Quarterly Bulletin. That's where you are going to get the latest information on the production method. So in the this information is information from 2011. The primary sector added value of how much? Of 324,365 million rands. The primary sector added 556,708 million rands. And then the tertiary sector added value of 1,789,431. So what is mostly important here, guys and girls, is that we said it's a gross value. A gross value, the word gross means total. So for us to get total, it means we must add. We are going to add 324,365 to 556,708 and 17894. If you add all these, you are going to get your answer as 2,670,504 million rands. So we are going to add all these values so that we get to gross value added at basic price, so that we get to gross value added at basic price. What does gross value added or the basic price mean? Basic prices are initial prices in the production of all final goods and services. Before considering the taxes, we do not consider the tax. There are no taxes added there, right? Before considering the any taxes and subsidies on products, as well as subsidies on production. In the national account, GDP is calculated using production approach, right? So when we say basic price, there are no taxes added, no subsidies subtracted. So after you add the value added by the 3 stages of production, we get in now to value added at basic price. So we must add the tax on products, because the primary, secondary, and the tertiary sector, they produce products. They produce products. So we add taxes. Why must we add the value of tax? Remember, in South Africa, we pay what we call value added tax. So the pain of paying tax is borne by the final consumer of an item. We always need to subtract the subsidies. Why we subtract subsidies? Subsidies are benefiting the producers, not the final consumer, because subsidies are provided to the manufacturers by the government so that to encourage them to produce goods. Grade 10 syllabus. At one stage we discussed import promotion as well as export promotion, right? So the government uses subsidies in order to encourage entrepreneurs to produce goods of high quality. The second reason why subsidies are made, it is that the price of final goods become a bit reasonable for consumers. The producers mustn't charge us higher prices. So the first reason I said subsidies are given so that entrepreneurs are encouraged to produce. The second reason is that goods should be at reasonable price so that the final consumer is able to afford to buy. So when you add the tax to the total that we get at basic product, the tax here is 312,863 million rands, and the subsidy is 19,106 million rand. We are going to add 312 to 26,70504, but we must subtract the 19 because it's a subsidy. The sum that we get in there, or the total thereof, is going to give us gross domestic product at market price. Very important, very, very important. You must always remember, we add the tax, we subtract the subsidy. Add the tax and then you subtract the subsidy. That is very important item to remember. Let us go to the second method of calculating the national account. The second method is the expenditure method. The second method is the expenditure method. The second method is the expenditure method. Expenditure on gross domestic product is the total spending on final goods and services produced within the borders of a country. So when we use the expenditure method, we are going to calculate how much money was spent by the participants, mainly on goods that we produced in South Africa, right? How much did the household spend? How much did the government spend? How much capital was spent on capital formation, right? It is calculated by adding all expenditures of the 4 participants of the economy. Let's see now. The first item is final consumption expenditure by the household. That's participant number 1. The second participant is the government, expenditure by government. And then Gross capital formation, this is investment. Gross capital formation means investment by the firms, right? And then we're having residual items. We're having residual items. And then to get these, we must also add. We add spending by the government to spending by the household, spending on machinery by firms, as well as the value for residual items is going to give us the total. Gross means total. Gross domestic expenditure. Gross domestic expenditure. But remember, we always subtract what? We always subtract the imports. Less import of goods and services. But we add the value of what? Of exports of goods and services, because that is money that is coming into our country. But imports are their values, the money for imports, it goes out of South Africa. It's a withdrawal. It goes out of South Africa. It goes to the foreign countries. So money that is taken out to foreign countries or that is paid to foreign countries is always minused. We say less that amount. And that is going to give us the expenditure on goods at market price. So if you add the imports and then you subtract you add the exports and you subtract the imports, then you are going to get the value at market price. The third method, it is the income method. When we use the income method, we are going to calculate the income received by, again, the participants. Because remember, the circular flow shows us the interaction between the different economic participants, right? Let's look at the first variable there, which is compensation of employees. Compensation of employees refers to labor, right? Labor is a participant in the economy. They come from the household, right? So we're saying that the income method, every factor of production will earn income when goods and services are produced. Therefore, the total income earned must be equal to the total value of production. Remember, we said once the there is equilibrium in the economy, and equilibrium in the economy, production must be equals to income as well as expenditure. So gross domestic income is the total of all income earned by residents, individuals or firms in the production of goods and services. Let's look at this one. The compensation, that is salaries paid to all the workers or employees. Net operating surplus, we add that to consumption of fixed capital. It's going to give us 2,631,227. And then always remember, I said we must add the value of taxes and then we subtract the value of subsidies. Then we're going to get the basic price value added at basic price. First one is at factor cost, because it's the cost, the cost that the producer experienced during the production process when paying salaries, when buying machinery, right? That's factor cost. And then when we add the factor cost, we add the subsidies, we minus the taxes, we are going to get the basic prices. Again, very important, the difference now here is that we added subsidies on what? On production, because employees were paid during the production process. Employees were paid during production process. We need not confuse the gross value added method, which is the production method. We only focused on the primary sector, the secondary sector, as well as the tertiary sector. But with regard to the income method, we only focus on the income received by the participants who took part during production process. So there's tax on production as well as subsidies on production. And that is going to give us gross value added at basic price. Then we are going to say, after the producer has calculated his production cost, the cost of production. Now the producer must determine the selling price. That is why we are now going to have what? Products. When the producer decides on the selling price, tax on products, and then subsidies on products. That's what we are going to get afterwards. So we also add taxes on products, subtract subsidies on products, then we get what? Gross domestic product at the market price. The last topic under the circular flow, it is the last topic would be the multiplier. The multiplier is a change, it refers to a change in spending that causes a disproportionate change in aggregate demand and the level of aggregate income. We call that the multiplier effect. We call that the multiplier effect. If a change causes a change in spending by one participant causes a disproportionate change in aggregate demand as well as aggregate income. Investment spending by firms and government works in the same way. Let's say, for an example, if the government decides to make an injection, it's a change in spending by the government. The government decides to make an injection into the economy. So what is going to happen? There is a change in what? In government spending. There is a change in government spending. And what will happen if there is a change in government spending? There's going to be a change into the entire economy. If the government, for example, earlier we mentioned that the government decides to build a school or decides to improve on infrastructural services, there are people who are going to get jobs, right? Production of what? Raw material must increase. Why? Because more raw material will be used for the service, and as soon as people get job opportunities, the income will also increase. And once people get an income, what happens? This is going to increase the quantity demanded because people now will have more money to spend. And therefore, once quantity demand increase, it shows what? An increase in consumption spending. So that is the disproportionate change. The change is not always the same, and the change can never be the same. I really say that the change can never be the same. For example, why am I chose to use the word can never be the same. Let's say the government decides to inject into the economy 20 million to build a school. Can we really say that 20 million people will be employed? That is not the case. Yes, a certain number or percentage of the community will be employed, but this percentage will not be equal to the amount of an injection, which in my example here is 20 million. That is why we use the word disproportionate. It's not equal. There is going to be a change in the economy, but that change is disproportionate. That's what the word disproportionate means there. Consumers can do two things with their money. What I have mentioned that is that they can create demand. By creating demand, it means there's going to be a change in consumer spending. Or if consumers do not, or this household do not increase their demand, someone may be wise enough to say, okay, I am going to save now my income. I was broke for the past years because I was not employed. Now that I am employed, I am going to save my money for future use. So, one, we say they can spend, or consumers can save the money. The proportion spent by the household from their income, it gives us what we call marginal propensity to consume. Marginal propensity to consume is the proportion of the consumer's salary which they are willing to spend. Let's say, for an example, out of an injection of 20 million, we having this particular consumer who earns 10,000 rand. So from earning 10,000 rand, this consumer decides to spend 8,000. Now we must calculate the proportion which this consumer wants to spend. How much is the income? The income is 10,000. But how much part or proportion does this consumer want to spend is 8,000. So how do we calculate the MPC? We are going to say now marginal propensity to consume is going to be the change in consumption divided by the change in income. And how much is the change in income? The change in consumption is 8,000, whereas the change in income is 10,000. And then we get in the answer there. This one cancels this one cancels this one, 0.8. It gives us the value of the proportion which the consumer is willing to spend. Now, let's say, okay, this proportion of 0.8, it is saying to us that out of each and every 1 rand earned by this customer or consumer, he is likely going to use only 80 cents. He is likely going to use only 80 from each and every rand. So out of 10,000, it is just going to be 0.8 proportion. That's the spending which he is willing to spend. When we want to calculate the value of the MPS, we've just calculated the marginal propensity to consume, the amount or the proportion of income which we intend to spend. When we calculate the proportion of money or of income we want to save, we say a change in saving divided by a change in what? A change in income. They are calculated more or less the same. The thing is, you just focus on how much is this person now willing to spend from his income. That becomes consumption. How much is this person now willing to spend, to save from his income? That will become a change in what? In spending. That will be a change in spending. Let us go back to the example. We said here, this consumer is earning 10,000 and he intends or willing to spend 8,000. So it means out of 10,000, 8,000 will be spent. So how much will be saved? It's going to be 2,000 rand. Then we calculate the MPC. 2,000 over how much is the change in income? It's again, sorry, I made a mistake here. Can we go back? Life. All right, can we go back to the example here? I said that the income is 10,000. The amount which the consumer here is willing to spend is 8,000. And therefore, we must divide by 8,000 over 10,000, not over 1,000 rand. Then the 3 zeros is going to cancel. Then we say 10 doesn't go into 80, but we add it. The answer is still 0.8. I needed to rectify that. Not 1,000, but it has to be 10,000. Again, here, the income is 10,000. Now we'll get in the value of the marginal propensity to save, the proportion which the consumer is willing to save. 0 cancel, 0 cancel, cancel, 0. Then you say 10 into 2 doesn't go. We add 0, 0.2. So the proportion of income which the consumer is prepared to save out of the income of 10,000, which is 2,000, it gives us the proportion of 0.2. 0.2. I want to show you something here. When we add MPC added to the value of MPC added to the value of MPS, it must be 1. Why? Because from your income, when you add your spending to your saving, the answer must always be your total income. You must, whatever that you did not spend, when you add to what you have spent, it must always give you your income. So if you check this one, we're saying that MPC is 0.8. MPC is 0.8, and then MPS is 0.2. If we add 0.8 to 0.2, the answer is 1. You must bear that one in mind. Very important. MPC added to MPS, the answer is always 1. So when you want to know the value of your MPS, let us go back again. We said that the value of MPC, we use the formula a change in consumption, which is spending, divided by a change in the income. Then you substitute and get your answer. When you want to calculate the MPC, the MPS, we say a change in saving, the proportion you decide to save divided by your income, then you get your total. And then, very important, and be here always, marginal propensity to consume added to the proportion we intend, the MPS, we intend to save. The answer is always 1. The answer is always 1. Let us now calculate the multiplier again. We can calculate the multiplier for different sectors of the economy. Remember, in the economy, we're having a 2-sector model. We're having a 3-sector model. We're also having a 4-sector model. A 2-sector model, it's a model where there's only 2 participants. We're only having 2 participants. And who are these participants? They are the household and the firms. It's a participant that comprises only of the household and the firms. And how do we calculate the multiplier for this sector? We're using K. Some books, they say it's alpha is equals to 1 over 1 minus MPC. Or you can use the formula K or alpha over 1 minus MPS. Why these 2 formulas? If you are given the value of MPC, you use this formula. If you are given the value of MPS, you use the formula 1 over MPS. So you must make sure that you know both formulas. When you have the value of MPC, you use the formula Alpha is equals to, or K is equals to 1 divided by 1 minus MPC, because we are only going to substitute the value of MPC. But if the examiner gave you the value of marginal propensity to save, you use the formula K or alpha is equals to 1 divided by MPS, because you are going to substitute the value of MPS. Let's make some examples here. Let's say you are requested to calculate the value of K, and you are given MPS 0,2, let me make it 0,3, MPC 0,5. Which formulas are we going to use in these two questions? We are going to say we have in the value of MPS, then we use this formula. We're just going to substitute 0,3 there. And then we have in the value, the second one, we have in the value of MPC, we're going to use the first formula, because we're given the value of MPS. For 3-sector model, we have in 3 participants now, which is household, firms, and the government. The formula becomes different. Remember, we're paying tax to the government, then our multiplier is going to be 1 over marginal rate of tax that goes to the government, marginal rate of tax that we're paying to the government, added our marginal propensity to save. This is the method that you use when you calculate multiplier for 3-sector model. If we are requested to calculate multiplier for 4-sector model, the participants are the household, the firms, government, as well as the foreign sector. There's import as well as exports. Then the formula is different. The formula will be 1 over marginal propensity to save added marginal rate that goes to government tax plus the marginal, the MPM. This now relates or refers to the marginal propensity to import. We use this formula when we calculate a multiplier for 4-sector model. Very, very important again. When we're calculating the multiplier, make sure that you convert all your values to a decimal number. Let's say you are given your values in rands. Your values in 1 rand 50 cent. Make sure that you convert that. Convert to a decimal number. How do we convert? By dividing with 100. Then your value is going to be in decimal number. You just say 1 rand 50 divided by 100. Your value is going to be something there. You divide by 100. All right? Make sure that every time you must divide by 100 to convert the values to a decimal number, so that you get the correct number, the correct value for your multiplier, so that you get the correct value for the multiplier. The other thing, the examiner may want to confuse you and give you the values in cents, 50 cents. You do the same thing. You must still convert to a decimal number by dividing with 100. Please make sure that you all know the formula of the different sectors of the economy. A 2-sector model, we use the formula 1 divided by MPM, 1 divided by 1 minus MPC, whereby MPC refers to the proportion consumers are willing to spend. If you are given the value of MPC, this is the formula 1 divided by 1 minus MPC. But if you are given the value of MPS, you use the formula alpha is equals to 1 divided by MPS. And you must always remember to convert your values to a decimal number so that you get the correct value for the multiplier. The value of the multiplier is always equals to 0, less or equals to 0, less or equals to 1, or greater than 1. That is why you must always convert to a decimal number. That is why you must always convert to a decimal number. The multiplier for 3-sector model, where we pay tax to the government, we have marginal rate of taxation that we pay into the government. The value of the multiplier when we're having an open economy where we trade with the foreign sector, it's 1 divided by 1 divided by marginal propensity to save plus marginal rate of tax plus the marginal propensity to import. Those are the formulas for calculating the multiplier. Guys and girls, we have reached the end of the lesson today. I hope you were clear, you understood the question, the topic, and you are going to prepare very well this topic, because from the topic we can have short conceptual questions, we can have long question, like I did a long question today with regard to the role of the participants. The additional part can be the markets. The additional part can be the multiplier. Be able to define the multiplier. We said that the multiplier is a change that is brought by any change in spending of one participant to another participant. And the other thing that we always need to remember, there is a positive relationship between marginal propensity to consume and the size of the multiplier. If we spend more, if we consume more, the value of the multiplier or the size of the multiplier will also increase. But if we spend less, the value of the multiplier is also going to be less. If we save more, the value of the multiplier will be less because there's no money in circulation. The higher the MPS, the lower the value of the multiplier. The lower the value of MPS savings, the higher the value of the multiplier. The multiplier shows the relationship in one person spending as an income to another person. That is the multiplier in essence. Guys and girls, thank you very much. Enjoy the year. Enjoy economics. It's a very nice subject. It's very alive. Enjoy and make it fruitful. Thank you very much.